Morning everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I am with you with the specific area of ABFM. How are we doing everyone? Today I'm gonna take up this topic of adjustment of uncertainty and in decision making, in investment decisions along with decision making in our session. So let's start with it. चलिए. Here comes the first question. This is regarding risk management. Okay, everyone, first of all, please share the session, like the session, as well as subscribe to the channel if you haven't done it yet. Some of you important areas are to look forward is this only. Rest, in these classes, whenever you're going through the class, whenever you are going through the class, just make sure that you are able to do all these things in a proper way. In case you need any help or something, you can definitely look at the Telegram channel, CAIIB exam 2024 Niharika ma'am. Here I have given a lot of content regarding the examination along with the previous year questions, and even the previous year questions whatever were asked in the examination are available here, and ultimately whatever we are coming up with every single day for this examination is also here, so I don't think you will face any problem in this specific area at all. Okay, rest if you need any kind of help then definitely you can come up here. Now let's look at this. First of all, when we talk about leverage, leverage is basically getting some kind of loan from someone. It involves pricing strategy, buying and leasing, sequential or insurance coverage. Leverages when you're taking financial leverage and risk management. See, you don't put all the eggs in one basket. What about this particular saying of Warren Buffett? It's very, very common, very popular as well. It is when we talk about this specific area, we are looking at what? What does the financial leverage and risk management primarily involve? Whenever we are talking about the risk management, we don't want to have things, their ownership. So what do? We buy something and we have lease. You know, we either buy or we are looking forward towards lease and all. In this case, our risk reduces a bit. I won't say at a very high level, but up to a level it does. What type of analysis is recommended for managing the risk of excess capacity due to changing market conditions? Sensitivity, CVP, decision tree, or scenario? Everyone, go ahead and answer. What would be the answer, everyone? When we talk about the excess capacity due to changing market conditions. When we talk about the changing market conditions, we're looking at decision tree analysis. We've talked about decision tree analysis, everyone, recently. When we talk about decision tree analysis, what do we say? Decision tree analysis is a situation where we have actually, na, it is basically a tree which is kept on the horizontal way. This is the main branch. This is your decision. It can be divided into yes and no. Everything has a probability and everything will lead out to other different situations. Because if I take the class, then what will happen? If I don't take the class, then what will happen? What is the probability of taking the class and not taking the class? Then with every single thing there is further capacity coming up. When further capacities are coming up, that is decision tree. What is the purpose of forming strategic alliance in risk management? To reduce variable costs, to keep potential partners, to manage supply chain disruptions, or to ensure against natural disasters. Risk management in terms of strategic alliances. Strategic alliances is basically you're trying to you have got into the survival mode of the organization. That's what I can say. You feel that the organization might face problems, so it's better that we look forward towards that specific era. So in this case, what do? We are looking at what part? To keep the potential partners ready for quick opportunities. Whatever is coming up, we're now trying to acquire maximum. That is covered under strategic alliances. Okay, so the answer is to keep the potential partners ready for quick opportunities. Acha, now comes the next part. Let's talk about, first of all, subscribe to our channel, everyone. For CAIIB, currently the regular sessions are going on, plus even the previous year questions are now available for you. Okay, so you can actually look at all these things in our courses. Please go ahead and check it out right away. Now, officially starting with the chapter of, acha, this is corporate valuation. This is actually a mix of corporate valuation and one question of corporate valuation is there. So let's talk about the corporate valuation only. I had added the questions of corporate valuation today. I was thinking to start with the decision making. So from tomorrow, first of all, I'll take up decision making and then I'll continue with corporate valuation. Corporate valuation is basically a situation where the company is trying to prove itself in the market. Where do I exactly stand in the market? Am I having a good, strong marketing strategies? Am I having a strong position in the market or not? That is corporate valuation. You're of course trying to have a stronger position in the market and trying to prove yourself now. That is what we talk about when we say the term corporate valuation. To estimate the future growth, or when we talk about the to determine the value, right? Now, when we talk about this specific area of future growth to determine the value of the company, to analyze the market, or to calculate the book value. Book value is something the accountants can do that for us. It will start from the accountant. They will prepare the books of accounts and the CA will come and say, "Arey, this is the book value of the organization all together." That is what we say in terms of calculation of book value. That is not the point. Corporate valuation is actually what is the value of your company from the point of view of the people who are involved in it, the stakeholders altogether, the employees, the customers, and even the general public. How do they look at it? That is where the share price of any particular thing goes up or down. Na? How is the market value of a company most commonly determined? By analyzing the balance sheet, by multiplying the number of outstanding shares, by adding short-term and long-term debts, or by evaluating the company's total assets. What's the answer, everyone? Market value is determined. Market value is always looked upon how people are looking at it. Matlab, if people want to buy my shares, what is the price of the shares in the market there? So in this case, we are always worried about the share price. Okay? By multiplying the number of outstanding shares with the share price. If we talk about the book value, we take the face value. When we talk about the market value, we're taking the market price of the share. If I said the company has 10,000 shares and currently I shall look at it. Have you seen MRF Tire? I think I was recently again reviewing it. This particular share is right now at more than 1 lakh. I think it was last more than 1 lakh 23,000. So I started reviewing this particular share when it was barely at 69,000. At that point of time, it was at 69,000. So now it has grown up to this. I think this is back in 2019. 2005 around, this was around 5,000 bucks. So look at the speedy jump they had taken over the years. Now this is what we talk about the valuation of a company, where they are making sure that they are standing strong in front of the people. है ना? Okay. Enterprise value can be approximated by which of the following formulas? So this is also important. Huh? Enterprise value. Equity value minus short-term debts minus long-term debts. Equity plus all debts and obligations minus cash. Maximum value plus book value plus minus debts or total assets minus total liabilities. Now this question is basically a practical question asked in a pure typical theory aspect. Okay, now I think it would be better to be visible right now. What say? Isn't it? This is not a theory question. This is actually a practical question. है ना? Everyone? Now what's gonna be the answer? The correct answer to this question would be what? The answer is equity. You take your equity. This is actually similar to your capital employed, the money that you have put in the organization for a longer term. That includes your equity plus your preference, equity nahi. Then we add up, this is all your equity portion is of shareholders all together. Then we have the debts which are extra long term only, and then you remove cash and cash equivalents. Then that's the answer. Why do managers need a business valuation model? Why do they value the business? But that they have to prove it to the people that they are earning good enough to estimate the future growth rates, to determine the tax liabilities, to estimate the effects of various strategies, or to calculate operating expenses. They don't need it for calculating the operating expenses. That is for the P&L part. है ना? P&L will see to it. Why do? We have to see it in the terms of valuation. In terms of net worth, you cannot say, pata hai, I spend 1 lakh rupees on something. No. When you talk about business model, you're looking at what is the net worth of the organization? What do you own as an organization? How strong are you as an organization? That is business valuation. When we talk about this business valuation, it is to estimate the effects of various strategies on the value of the firm. Okay? Acha. Now comes, this has been covered under international valuation standards. There are multiple valuation standards which are existing, and this is what they take up in terms of this entire working. Now what is the primary concept, primary economic concept are the methodologies of valuation based on according to IVS, sorry. Supply and demand, market trends and inflation, price equilibrium, anticipation of benefit substitution, cost analysis, risk assessment and market growth, profit margin, return on investments, and asset depreciation. What's gonna be your answer, everyone? When we are talking about IVS, it is what? What should be the answer? See, when we talk about the IVS 105, it is the price equilibrium, anticipation of benefits along with substitution. Keeping all these things together becomes B. Okay, all these things are taken up because you're trying to value the company in terms of their earning capacity, their money, everything that they possess. That is what we look forward to. So it is the price equilibrium, anticipation of benefits, and substitution. Everyone, time for the concept of the day. I hope you have been reviewing my classes. With every single class, now I've come up with the specific area of concept of the day. Concept of the day is basically a specific topic where I'm talking about a specific terminology or any specific formula, anything which is very important for the examination. Okay? Let's talk about the concept of the day. We are talking about corporate valuation. Let's talk about the corporate valuation only. This comes the business valuation methods. But in this arena, what do? We value the organization. On what basis? If I tell you that pata hai, I can earn up to 1 CR, that is my income. That means you'll be like, acha, then probably the particular organization is good. If they are making up to this much amount of money, it's a startup and then it is earning this much money. This would be a good company. That is income approach. In this case, they talk about the discounted cash flow analysis. We're talking about your inflows that you will be getting over the period of time, along with capitalization of earnings. What do you mean by capitalization, everyone? You look at the specific area of finding out whatever your earnings is and your capital expenditures are. That is what we talk about. So ultimately, in income approach, it is about your earning capacity. Under market approach, what are they doing? They're looking at market capitalization method, market multiple formula, or comparable company analysis. This is not exactly what they had given in the book, but yes, they have talked about market approach. Market approach is how market looks at you. If the market says that, "Arey, this is a very cool looking company," an organization which people find very interesting, or an organization where people are running after it, that is market approach, everyone. That is how you define the specific area of market approach. Then we have asset approach. That is when the organization is asking, what do you possess? And they tell us, we have bungalow, we have gadi, we have this, we have that. We have talked about land, we have talked about building, we have talked about, you can say, the machinery that the organization is having. We talk about not one thing, but multiple things which the organization is strongly possessing. When they talk about all this area, this is what we talk about net asset value. Okay, these two are given in the book in a very detailed format. Liquidation value method is, everyone, there's one particular example that I can give you. I use this laptop every single day for our classes. The camera is being used, all those specific things which I'm using in my class are extremely important for me. So what do I do in this case, everyone? Whenever I'm taking my classes, I'm always worried about one thing. My class should be going on in the proper manner. You know? Now the point is, you don't value these equipments every single day because I'm not thinking to sell them. I will value them, but the day I'm actually switching, whenever I'm upgrading my laptop, I'm upgrading my camera, on that very day I will tell you ki acha, I'm thinking to grow further. That is what I'll do when I move forward. Isn't it? At this point of time, I would never say that. Liquidation value means to note down the market value just because the organization is dying. When parents are dying, they make up a will. Now, at that point of time, whatever the valuation of the books are going on, that is what they record. So, valuation model in terms of asset approaches basically when the organization is dying, at that point of time, what is the value? That is liquidation value. When it is ongoing, what is the value? That is called net asset value. Both these are given in our book in a very detailed format. So this is an important area to be covered. And I think question can come up from this liquidation portion as well. It's a concept and a very strong concept overall. Chaliye. Okay, everyone. Before I end my session, let's look at this. Let's go on to Google and find out www.adda247. Go on to the specific area. From tomorrow onwards, I'll be starting with my case study area as well. Nahi, just say it now. I'll be starting from tomorrow, day after tomorrow. Let's look at CAIIB June 2024. Let's look at this specific area of case study and Mahapacks revision batch. I don't think at this point of time many people are still looking forward to the fact that pata nahi, what should I do right now? What is that quick thing that I can do for all those 4 important subjects that I want to take up? Click on the area of buy now. Use the code Y541 and go ahead and use the code Y541 and apply it. You will get 79% discount at this point of time, everyone. You're getting for 3359.79. Today is 8th of June. The examination of ABFM and other everything is going to happen in July. That means you are investing roughly, to be very honest with you, you're putting around 3300, right? 3350. Let's make it 3400 for 2 months. Matlab 1700 rupees per month. Matlab, I think you can definitely look forward to this because every time we go out and eat na in a restaurant, that is what we're gonna spend. So 1700 per month and giving you an increment which is of a good amount, and at the same time you can recover this in no time once you have got the increments, right? So if you're planning, then purchase it using the code Y541 to get this 80% discount as well. If I talk about 80%, since this is if you buy through the app, then you can get it at a good price. Minus 80% you will get for 3199. 3200 rupees everyone, 1600 rupees per month. Effectively you can buy this particular Parpack revision batch, and we are also talking about the case study batch. All these things are included for you, so hurry up and get yourself enrolled in it right away. Thank you so much for being there. I'll be meeting you tomorrow. Oh, tomorrow is Sunday, so happy weekend everyone. Enjoy it. Thank you.